Hey, welcome back, everybody. And I'm Mike. I am your host of Insider Secrets. Insider Secrets is brought to you by My Core Intentions. And hey, before I get started today, let me just ask if you would just do a couple of favors for me. If you'd go out and follow me on Instagram and Twitter, Facebook, whatever social media platform you're on, if you would follow me there and follow My Core Intentions also, LinkedIn, as well as on YouTube, if you'd subscribe and to the podcast channel. So I just ask for a little bit of support and help us grow a little bit and get some more recognition. I appreciate that. And I hope today that I fill in some blanks for you. You know, we left off the other day where I just was talking about the beginning of my story. And I got to the point where I talked about building my syndication company, my boutique private equity firm, right? I always had wanted to be in the apartment business. And I went out in 2005. I did my first deal. You know, I put that little ad in the newspaper. All it said was real estate investors wanted, and my phone rang off the hook for a few days. I was able to raise a couple $100,000 on my first syndication. It was an 11 unit deal in Chicago. But what occurred to me was that people wanted to know more about investing. I had been teaching about real estate investing in my real estate practice. Most of my business was investors, but I knew that we could scale this and it could be on a bigger scale. So what I did was I started raising money. Over the next 30 months, I raised $18 million. I bought $60 million worth of real estate. It was 4,000 apartments in 5 different states. I grew a property management company that would be managing 7,500 units. That was the 4,000 we owned and 3,500 for a third party. And then the market changed. 2008 came around. I remember I was sitting having lunch with my CFO, and we knew things were starting to get tough. But the news happened to be on in the restaurant we were in. And we were watching people carry boxes and boxes out of Lehman Brothers by the dozens. And I looked at him across the table and I said, "We're in big trouble, aren't we?" He said, "Yeah, we're in big trouble." And it wasn't much longer that everything started to unravel. We had Lehman Brothers that went out, Bear Stearns that went out. We had AIG that faltered and went out. You had lenders like Countrywide just totally go bankrupt. Washington Mutual go out of business. There were companies like Taylor Bean Whitaker that were doing bad notes and bad deals. All of this caught up. You know, there was the paper that they were writing loans on, B and C deals, was not good. They were trying to wrap it all up, sell it on Wall Street, and it backfired. And so as a result of this, the whole world went, into a frenzy, right? You may remember the markets dropped. I've seen corrections in the marketplace before. I saw the real estate market correct 10% and recessions that lasted 17 or 18 months, right? I never saw anything that was going to last 7 years or 8 years. I think there's still people recovering from 2008. But then there were people who made a ton of money. You know, again, if you're in the right place at the right time sometimes, right? But listen, along the way, I made a lot of mistakes and I realized what those are today. And as a result of realizing what those are today, as I move forward and I do some apartment opportunities again and some apartment syndications again, those same challenges will not come up because I know what to watch for. You know, it's things like I was over leveraged. I bought property. They were throwing money at us at that point, loans, and we were buying property at 10 and 15% down. And the problem with that is when you buy property at 10 and 15% down and your loan to value is 85 to 90%, you have nowhere to go if the market falters. You can't pay your bills. We were going on the fact that we thought the market would continue to rise. You know, even though the residential market fell and there was problems in the residential market, I still thought that the commercial market would grow. I thought that there would be safety in the multifamily, and there was if you had enough equity. I overpaid for properties, so I paid a little bit more than what I should have paid for properties. The other piece is that I grew way too fast. You know, just in 2007, I closed 17 real estate apartment complexes, and that was about 2,700 units. We didn't stabilize anything along the way. We just kept running and running and running. You know, it was like we were just eating this elephant more than one bite at a time, right? So what happened as a result of that, I found myself in a place where I was like balancing on two legs of a chair. And that was very unstable. There was no way that we were going to hold up. So property values decreased, and they decreased because NOI, your net operating income, faltered, right? I had a property manager call me one morning, and this was 2009, uh, beginning of 2009, and she was in tears. And I was like, Jen, what's wrong? And she said, listen, I have 32 moving trucks in the parking lot this morning. I don't have a scheduled move out for 45 days. So that didn't just happen in one case, but it happened across the board in a number of complexes that I own. You know, the problem was that when I bought that complex, I bought that particular deal in a market that the market was rated number one city in the country to raise a family in, but it was backed by the car industry. So you had all of these little companies in town that were making car parts. They made knobs for the radio. They made dashboards. They made beading for the seats and the springs and the fill for car seats. All of these businesses, when the market got hit and the car industry and the transportation industry took such a hit, it caused these businesses to falter and go out of business. Half of the main street in town was shuttered. You know, and it's just amazing to me how this happens. And as a result of this, what the side effect is to the stakeholders, not your shareholders in a business, but the stakeholders. And when I talk about stakeholders, I talk about the community, right? The small businesses in the area, the living in the area, the real estate in the area, the grocery stores and gas stations. When that happens, everything starts to disperse. So the market drops out about 40%. My property values drop about 40%. My occupancy goes from the low 90% range, low to mid 90s, drop down to the low 70s. How are you supposed to pay your bills? We don't have the cash coming in. Now, not all my properties were like that. I had a number of them that were really still healthy and still good. But what happened was that these ones that were bad, that were going towards foreclosure, that there were problems, I couldn't go to my investors. I didn't want to tell my investors that there was a problem, that there was an issue, that maybe I messed up, and maybe I didn't mess up, but maybe because the market crashed, I didn't know how to mitigate the market. So what happened was I started to move money between companies. Now, I talked to my attorney and I talked to my accountant, and they said it's okay as long as you have a note saying that you're going to put the money back. Now, my belief was that the market was going to correct maybe 10%, and that during that correction, it had bounced back in 17 or 18 months. Well, that didn't happen, right? We all saw that. So as the market continued to falter, I'm moving money back and forth between companies, not disclosing it to my investors. And therein that lies the problem. Now, a couple of the other issues that were going on at that time was I had my head buried in the sand. I really wasn't paying attention to the key performance indicators. I wasn't really paying attention to the numbers and to what people around me were telling me. You know, I had people tell me that they didn't trust what was going on and some of the people around me, and I didn't believe it. You know, I tell a story that I was out to dinner with my wife, my ex-partner, and his wife one night for dinner, and you know, I never talked to my wife about business, which was a problem in itself. I should have shared some information more so than just saying, hey, we brought another investor in or closed another apartment complex today. But I should have shared deeper with her. And what happened was, on the way home from dinner that night, she said, you know, I don't really trust him. And what did I do as a good husband? I said, hey, honey, I have this under control. Don't worry about it. Well, I really didn't have it under control. So what happened was, as a result of those issues and those problems, about a week later, my attorney said to me, I don't know what's going on, but I don't like some of the things that are happening. So here I have people in my life that are close to me, that are my close advisors, that are in my inner circle, that are telling me they don't trust something that's going on, or they don't trust somebody, and I'm not listening to them. How many times in our own life do we not pay attention to other people around us or a voice around us that's telling us something that we should listen to? I'd urge you today, if something like that's going on, that you pay attention because it's very important. So here's what happened. I have all of these challenges: overpaid for property, over leveraged, didn't raise enough money, had my documents written where I couldn't go back to my investors and ask for a capital call. That was a big problem in itself. People around me tell me they don't trust my partner. They don't trust some of the things that are going on. I'm not paying attention. I'm not watching the numbers, the reports I'm getting. I'm just skimming over. I'm not really looking deep into them. And boom, all of a sudden, I find myself facing wire fraud and mail fraud charges, and wound up in court fighting it for about 2 years, and wound up pleading guilty and being sentenced to 10 years in federal prison. Now, I don't tell you that to tell you that I failed, because I don't think I failed, because what happens after that is really that story of redemption and the things that happen. But I want you to know that um, I went from a place of having great things in my life, of having really good success, to all of a sudden not having anything left and being put away for a number of years in federal prison. Uh, the success and the loss is devastating. But not only that, when I went to prison, I was gone for probably about 30 days. And my wife and I had talked about it, and we were going to hang in there and get through it. But after about 30 days, she said she was leaving me. And when that happened, that was really like the bottom. That was the worst anything could ever get. And I don't know if you've ever been to the bottom in your life, but when you get there, you all of a sudden realize that the only place you can go is up. So what I like to do when I come back next week is share with you how I started to come back from that and the things that happened. Because, the loss, the devastation, everything that went on, and much less the stress from the time that we realized that our company was in so much trouble till the time of ultimately being indicted and sentenced to that prison term was very difficult, and a very difficult time. And then when you go to prison, it's very dark, despairing. You wonder how you got there. You wonder. Here's what I equate it to. I equate it to the fact that you died and you watched your life go on in front of you. That everybody just kind of continued on, but you had stopped.